Stock markets are edging higher once again at the start of this week. We've had some good news and some bad news as far as the economy and the coronavirus is concerned, but it does seem that the good news is trumping the bad news at this moment in time, aiding the market recovery. You'll note that at the end of last week, we did see wobbles appearing in the markets. In fact, on Thursday, the Dow Jones in the US fell around 7%. Now, given the year we've had, you would be forgiven for thinking this is not too extraordinary a move, but this is still the 22nd largest ever decline in the Dow Jones index in its more than 100-year history. So it is still quite an extraordinary move. But given that it doesn't even make the top three as far as this year is concerned, maybe we are just becoming a little numb to the extraordinary. Now, that wobble did seem to be having an impact on sentiment, but at the start of this week, we have seen sentiment bounce back just a little bit. Now, there's been a few things really that have driven this. I think the most obvious of these is the fact that we are obviously continuing to see economies reopening here in the UK, non-essential shops reopening as well. We also saw that the Fed, and I think this has been the primary driver behind the rebound this week, the Fed has started buying up corporate bonds as part of one of its many programs that's running at this moment in time, further shoring up yet another area of the market which has looked susceptible to weakness over the course of the past few months. And again, further reassuring investors that the Fed very much has their back. And as we've seen, these massive stimulus programs from the Fed, these massive balance sheet increases from the Fed, but also other central banks around the world have largely driven the rebound that we've seen in equity markets. Obviously, all this additional cash flowing through the markets is naturally very beneficial indeed. Finally, we've heard as well reports of a $1 trillion stimulus plan. This is not necessarily new, but something that does seem to have picked up a little bit of speed at the start of this week in the US as well. One other thing that's taken a bit of the gloss off of the recovery that we've seen in these stock markets, though, over the last few days, though, has been a fresh outbreak in Beijing. Now, this currently has seen around 100 people infected with the coronavirus. I'm sure there's going to be many more as the tests continue. This actually broke out in one of the markets in Beijing and has led to quite severe lockdown measures already being imposed there. I'm sure these will become more severe if the numbers do continue to increase. But again, this is just a fresh reminder that we are maybe getting through the first phase of this coronavirus, but there's still potentially big second waves to come. And a city as important and as dense as Beijing is a stark reminder of how bad things can get and also how rapid the numbers can increase as well. So I think this is potentially acting as a bit of a weight on the equity markets, on the recovery that we've already seen at the start of this week. But as far as the charts are concerned, we've got the FTSE 100 or the UK 100 as it's called on the OandFX trade platform. And as you can see, once again, we came back and tested around 6,000 a few days ago, and we've rebounded nicely off this level. Now, that 6,000 area actually coincided nicely with the 61.8 fib. That was from the recent floor in prices and the recent peak in prices around 6,500. Now, that also coincides with around the middle of that moving average band, the 55 and 89 moving average band as well. And we've rebounded very nicely off this level. Obviously, again, 6,000 is a very big level from a psychological standpoint, and rotating off that number does give us a little bit more confidence. We did initially run into a little bit of problem around 6,200, but we've now pushed through there. We have to remember that in the FTSE, those kind of big 100 numbers do just seem to act as profit-taking levels. So we shouldn't be too deterred when we do see the market rebound off those levels. We've seen it again around 6,300. But again, I think the FTSE is continuing to maintain this little bit of upward momentum. Again, the next major test here is the 6,500 level. We've mentioned that on previous videos and in previous pieces that 6,500 was the big test. And we saw that a few weeks ago, and we did see a lot of profit taken around that level. If we can go through 6,500, then 6,800 becomes the key one for me. 7,000 is obviously massive, a massive floor there during the rally that preceded the pandemic. But 6,800, where we hit the 200, 233-day moving average band, and also historically has interestingly been an interesting area of resistance as well. But with all the stimulus that we're seeing, it does seem that there's a lot of support in these equity markets at this moment in time, with the risk down to the downside, obviously, being further spikes in this pandemic.